Hello everyone, I'm Andrew McNair from SWAN Capital and welcome to a special and timely video following the largest single day loss the market has experienced since 2020. It's been a turbulent week in the markets, and a major part of the reason for this volatility is the announcement made by President Donald Trump on Wednesday regarding the new tariffs. Now, President Donald Trump announced reciprocal tariffs against a wide range of foreign countries in a move that could have widespread effects on the global economy. Now, these tariffs range from 10% to 50%, with the notable targets including China, the European Union, and Japan. And so, according to a chart shared by the White House, Chinese products will be hit with a 34% tariff, while goods from the European Union will face a 20% tariff. And Japanese imports will see a 24% tariff. For all other countries, a minimum of a 10% tariff will be applied, and these tariffs are expected to take effect no later than April 9th, according to the executive order. Now, I want to share with you a personal perspective here. Now, a lot of people, they talk in theories, they talk about some other person paying tariffs, but as you may know, if you're a client of SWAN Capital, I recently purchased a new office, this 40,000 square foot office that we'll be in the process of renovating over the next year. And so I've been ordering some of the products overseas to help do it for a cost-effective manner. But I've already paid these tariffs, right? I just paid a 36,000 tariff. So this is not a theoretical discussion for me. This is something that's affecting real businesses right now. And while these tariffs may seem harsh, I do believe that they're necessary. We need to ensure fair trade practices. In fact, last July, I was in South Korea, one of our closest allies. They have been charging us tariffs on various goods. And I thought to myself, here's South Korea, where I was in Seoul, and just south of us was an army base. And the reason why North Korea, just north of Seoul and South Korea, is this country that hates South Korea, wants ill intent for this country. They are not sending any missiles to South Korea. They're not bombing South Korea. Why? Because there's an army base just south of Seoul. And so it's really unfortunate when our own allies are charging us tariffs. And so this imbalance has gone on long enough, and it's time for the U.S. to take action. The reality is if we don't address these trade imbalances now, we risk losing our status as a superpower and going silently in the night. And again, a lot of people, they don't want to mess up with the apple cart, but that's sometimes what you have to do to get things reorganized. And so we need to take action. And while these tariffs will undoubtedly cause short-term disruptions and frustration, this is an issue we cannot afford to ignore. The market is reacting, of course, to these tariffs because in the short term, they're likely to affect productivity and costs, and also affect logistics in the shipping department. So companies may adjust their strategies and possibly shifting some production back to the United States, or suffer dealing with higher costs for imported goods. Now, this could lead to higher prices, which in turn might reduce consumer sentiment, consumer demand, and lower profits for companies. So there's also a risk of retaliatory tariffs from other countries, which I actually don't even like that statement, because retaliatory means that they're responding for the first time. They've already put tariffs on us, so they're just responding again, which could again escalate us into a full-blown trade war if we go back and forth. And so the point of these tariffs is to do really one thing. It's to, hey, we have been charging each other back and forth. Why don't we just create a fair and balanced way of trade where we don't have any tariffs against one another, and we can trade back and forth easily. And that's what we hope, is that both parties will stare each other in the face and say, hey, this is stupid, isn't it? Why are we charging us both tariffs when we could just get rid of them completely? So the uncertainty surrounding these tariffs is a part of why the market is reacting this way. But here's the thing. This volatility is something we've been expecting. At SWAN Capital, we've been telling our clients to brace for market fluctuations, and we talked about volatility, not because I'm a prophet, but we saw the writing on the wall that we would expect volatility. And we talked about this in our State of the Market in January, which I encourage you to watch on the channel. And we are seeing that volatility play out here in April. Now, I do want you to make sure you understand this, and I want to bring you in because this is a fireside chat. Market downturns are a common and a regular part of investing. Volatility is a feature of investing. It's not a defect. When the market goes down, you can't say, oh, it shouldn't be doing this. It's supposed to. It's supposed to be cyclical. So despite a mostly calm year that we had in 2024, you can expect drawdowns are a normal occurrence. Even during a healthy bull market, nearly all calendar years have seen stocks decline of at least 5%. And more than half of the time, we see double-digit drawdowns, and this year will probably be no different. So although these market downturns can be unsettling, these times offer numerous opportunities. At SWAN Capital, we've been actively processing Roth conversions. Why? While the market is down, to set up a tax-free recovery for our clients. We're also arranging some of your accounts to use your extra cash, those cash equivalents like our money market that we call dry gunpowder, to buy into the market. We're actually dollar cost averaging that cash into the market. And so last year when the markets reached new highs, we carefully changed allocations in clients' accounts. We were downshifting and backpedaling into more conservative investments. And this allowed us to effectively downshift our portfolios, preparing for any future downturns that we can now lean into today. Now, as others are feeling fearful and they're worried about the blood in the street, we're taking the opposite approach and slowly upshifting client portfolios into equities while the market is down, ensuring that you don't miss out on future growth and a great opportunity. So here at SWAN Capital, we are fully prepared for both current and future market volatility, and we'll be proactively adjusting portfolios to ensure that our clients don't miss out on a valuable market opportunity. Now, as financial advisors, we're here to be that small voice of reason, to guide our clients like yourself through these volatile times, and your plan should be robust enough to withstand these types of market movements. And that's why many of our clients have what we like to refer to as wall accounts, things that are insulated from the market. And if you're not in that situation, we do highly recommend sitting down with one of our financial planners, our advisors, to get a second opinion, because it's impossible to get a second opinion from the person that gave you your first. And so I want you to know that we are putting second eyes on all of our clients' accounts, making sure that we take advantage of every opportunity that we see in these tumultuous times. I hope to see you at our next monthly market recap, and have a great weekend.